Welcome back. Let's talk markets with a longtime professional in the markets. She's Christine Tan, Portfolio Manager at SLGI Asset Management. Thank you very much for coming in.
Thank you for having me.
What do you make of this big rally that we've had since since April 21st? That seems to be when the markets really started taking off.
It's amazing. I was actually just speaking to someone in the green room saying we're almost back at record highs across the world. It is a little concerning. Obviously, we understand why there's been a rally. The worst case scenario in terms of tariffs, Liberation Day tariffs. Then we got China news, U.S. and China sort of stepping off of the brink over the weekend. But again, if you look at sort of the average level of tariffs in the U.S. now, it's roughly 16 to 18%, depending on how you do the math. At the start of the year, it was under 3%.
Yeah.
And to your point, you just said, Walmart warned is that we might have to start increasing prices this month, right? And then we had retail sales that were a little noisy today that came out in the U.S. So you are getting this very mixed picture.
Right. So you seem to be saying this rally could be at risk, that there are some macro factors that could imperil this rally.
Yeah. Compared to where the last time stock markets were at this level, let's put it that way, there were a lot less uncertainties. So it does seem a little bit like it's kind of come a long ways.
What's your take on Canadian earnings season? We put a lot of attention on U.S. earnings season. The U.S. parade is largely over now, and many TSX companies have also reported. And the TSX Composite continues to outperform stocks in the United States.
That's right. That's not a statement we make often, right?
Yes.
TSX does better. It actually was a really solid earnings season. So on average, across the majority have reported as well. So revenues and earnings have actually beat expectations by about 8% in Q1. So the fundamentals actually looked good. And obviously the biggest beats came from materials. Just talked about how strong gold prices were. So the gold miners in particular did quite well. But, again, the focus for us, for our PMs and really for investors was not on Q1 because that's backward looking now.
Right.
It's really trying to understand what companies are telling you. So how are tariffs going to impact you? How resilient is your supply chain? Do you have ways to kind of move around your supply chain? And then the last bit is pricing power. Do you think you have some pricing power to protect your margins? And in some cases, companies like Walmart probably are the best sort of positioned. They can negotiate with their suppliers because they're so big. And because they tend to sell staples that are more value-oriented, arguably they have a bit more room to take price as well. But if you're a consumer discretionary company, for example, it's quite a different outlook. So,
what kind of Canadian exposure do you advise for clients? I recognize each client is different, but what's your broad thought there?
So I would say can't make specific recommendations, but I can talk about what our Canadian managers are doing. So they're pretty well diversified across sectors. And one of the key messages coming out of our quarterly discussions with them was we're not making any big shifts because the tariff picture is still very uncertain. So what they have been doing, though, and they have been for years now, is really focus on businesses with strong competitive positionings because that in some ways protects you relative to the peers. Around the margins, whenever there's been a broad sell-off, like what we've seen a couple of times so far this year, they've upgraded a few of their names, but not really any big sector calls. Being cautious, staying invested, so not raising a lot of cash necessarily, but really talking to the companies to understand what the tariff picture looks like for them.
Okay, there's lots of political news here in Canada these days.
Yes, there is.
And you are watching the new Mark Carney-led Liberal government.
Very closely.
What policy initiatives do you think are most relevant to the Canadian economy here?
It's a great question, and it's something that our clients have been asking us as well, our advisors. And, a lot's been promised on the campaign trail. I think in terms of near-term impact, what we're focused on is housing. Obviously, that's a key cornerstone of what Carney's talked about. Not only if successful, even if partially successful, it will go a long way towards allowing hundreds of thousands of Canadians to actually achieve their house ownership dreams. But perhaps more important in terms of the economy is it's going to create jobs and create a stable domestic demand source for components like steel and lumber, which we know are sort of caught up in the crosshairs of the trade negotiations, I'll call it, with the U.S. The other thing we're looking at, which is interesting, is technology. So for the first time, we have a Minister of AI and Digital Innovation, kind of a cool title. But, the way that we're looking at it is from a few different angles. One, it could help us really grow our technology sector. That's great. But perhaps more important is the productivity implications. So I know we've talked about how Canadian labor productivity has been on the decline, especially relative to our US peers over the last several years. And one part of that can really help is innovation, implementing AI. So having a ministry, again, it's too early to know what the policy focus will be, but are there going to be policies to help small companies scale up technology? That would be one way to really help.
The political mood and in fact even the public mood appears to on pipelines appears to have shifted in a big way. He has pledged to make Canada an energy superpower, including in conventional fossil fuel energy. Now, there appears to be disagreement within the Liberal caucus. Stephen Guilbeault, the former environment minister, appeared to throw cold water on the idea of a new oil pipeline, at least yesterday. How realistic do you think it is that Canada can develop another either natural gas or oil pipeline, taking those products to non-U.S. destinations?
Fantastic question. And that's if I had to highlight a third area of policy focus we're watching, it's that we'll call it national energy approach, right? So still a lot of noise. Carney has made it clear he would support a more inclusive east-west pipeline. He has also highlighted several times that it really doesn't make sense to have oil in Eastern Canada come via the U.S. from Western Canada.
Right.
So, and we saw yesterday there was a signing of, I'll call it a provincial trade deal between Manitoba and Ontario. So perhaps one of the silver linings is for the first time in a long time, provinces are talking about working together. Does that mean that it's an easy path to get a long pipeline built? No. Does that mean that we're all of a sudden going to suspend environmental considerations? I would say the answer probably, rightfully so, should be no. But I think the odds are good that there is a focus on sort of really uniting that the East-West policy divide in terms of energy.
We'll have to leave it there. Thank you so much for coming in.
Thank you.
Christine Tan is Portfolio Manager at SLGI Asset Management.